What are mortgage points, or what are points? You've probably heard of paying points or buying your rate down. They all essentially mean the same thing. So a point is essentially 1% of the loan amount in the form of a fee. So if we're charging you 1 point and the loan amount is $100,000, that's a $1,000 fee for that point. So depending on your situation, we have an interest rate chart, right? So depending on how much you're putting down, what your credit score is, what type of loan we're doing, there's going to be available interest rates, and then there's going to be points for each one of those rates. So it's not an exact science. A lot of people think if I buy the point down, I'm basically taking my interest rate from 7% to 6%, right? No, that's actually not the case. In most cases, a point will only buy it down like a quarter, an eighth, sometimes half a point. It just depends on the loan program. So it's not an exact science, but this is where you're definitely going to want to have a savvy loan officer that knows what they're talking about so they can review that with you and go over the options. Because if you pay too much in points to get a lower interest rate, you have to look at the total break-even point as far as when you're going to be saving that money. If it's going to cost you $10,000 to save $100 a month, is that really worth it? So that's the type of things we look at when we're talking about buying points or paying points. But essentially, that's the gist of it. If you're going to be paying additional points, you're basically paying a little bit more to get a lower interest rate. But on the flip side, you can actually get they call it a discount point. You can request to get a negative point. So basically the lender is paying you points or giving you a credit on your loan for a higher interest rate. Now I know that probably doesn't sound very exciting or very popular, but just know it's out there. If you're a little bit short on funds and you qualify for the payment, it might be smarter to take a higher interest rate to get a bigger lender credit to cover all of your out-of-pocket costs so you don't have to bring any funds to the closing table. So there's just a few ideas, but essentially that's what a mortgage point is.